Charlie Munger once said, the big money's not in buying and selling, but it's in waiting. I think that is really important when you think about just the power of compounding money, really sticking to, first and foremost, creating, but then sticking to an investment policy and not letting the day-to-day politics or just random events that happen cause you to deter from your portfolio. And this is common. We're humans. It is not uncommon to see these events shake our investor psyche and cause us really to want to panic and jump off the ship and hope to get better and get back in when everything's okay, when we get the all is clear signal. But it doesn't always happen that way. It's not always as easy as here's when to sell, here's when to buy, and that's how you can make it through. Reality is events happen every day that may impact the market and the economy. And a lot of people, this is 2024, it's an election year, people want to think of election years as bad years. This is an election year, so you can't invest. We need to pull out and just wait and see what happens. And then once the election's over, we can decide to get back in and when things are comfortable. And I think what Charlie said is really important. Now, if you don't know, Charlie Munger was the vice chairman of Berkshire Hathaway, who was founded by Warren Buffett. Warren Buffett considered Charlie a best friend and right-hand man. You saw them a lot in media talking. Charlie recently passed away in November of 2023, but was an outstanding person, an outstanding investor. And I really think it's important to key in on what he said as someone who, with Warren, helped Berkshire Hathaway to grow into the huge company it is today. But it was by sticking with their investment policy and being laser focused on their vision. And I think that's what is important for you to do as you are accumulating for retirement and moving into, and maybe already are into retirement, is having an investment policy that you can really stick with and not abandoning your strategy. So we're going to look at a few things that I found really interesting. And I went back a little bit just to give it some parameters here. But if you go back to 1980, you'll see on my screen that I'm going to pull up, there are a handful of negative years. There's quite a bit of positive years. And the point here is that you never know what year is going to be good, what year is going to be bad, what events are going to influence the market that year. And it just becomes really difficult to time the market. So I went back to 1980. And just to throw out an example here, CNBC shows that in 1950, the median value of a home in the US in 1980 was $47,200. So if you put $47,200 into the S&P 500, and I went and got this information from officialdata.org, but if you invested $47,200 in 1980 into the S&P 500, and now this is going to assume dividends reinvested, you would have about $5,710,000 at the end of 2023. This is a return of investment of almost 12,000%, or 11.61% per year. Think about the magnitude of turning $47,000 into $5.7 million by doing one thing: investing in the S&P 500, turning dividend reinvestment on, and waiting, as Charlie Munger says. The power of compounding, not trying to figure out inflation rates or interest rates are really high in the 1980s, not having to worry about the tech companies and the dot-com companies, the technology companies in the 90s and early 2000s, the financial crisis, COVID, the most recent inflation, the government trying to reduce inflation by raising interest rates as aggressively as they did in 2022, not worrying about trying to time any of that, and having a huge compound return by waiting, not getting shaken up by presidential elections or midterm elections or any of these other geopolitical events, but staying the course, being resilient with your investment strategy. It's just really powerful. Too many people today focus on the short-term win. How can they turn $100 into $200 or $100 into $1,000 as quick as they can? We are a microwave world. We want instant success. And the real success, the real beauty of investing is in waiting, is in the slow cooker, the crock pot idea, if you want to think of it that way. Letting this thing simmer and cook and grow and work for you over the long term. And I know it's hard to separate the emotions from our money, from our portfolio and the investments. We're human. It's natural to have that inclination to worry about this, especially if it's all you have and maybe you're taking income off of it. And just the fear that you just can't lose it. I can't predict the history. History, however, has been on the side that if you can leave this alone and you can let your investments grow, then you will be rewarded. And I just thought this is a good example going back to 1980 and looking at the median home value in 1980, and had you invested that same amount in the S&P 500, what you would have today. So thank you, Charlie, for those great words. You will be missed, as your leadership in Berkshire was truly tremendous. Thanks for listening to this video. If you haven't already subscribed, make sure you hit the subscribe button. Be confident in your retirement. Have a wonderful day.